Hi, I'm Graham from Inca Chartered Accountants. We've put together this video series titled Tax Tips for Small Businesses to help you understand and save tax. One of the questions that we get asked most frequently is which structure is best for my business. As explained in the first video, the benefits of the sole trader, in this one I'm going to talk more about the limited company and its benefits. Now when we start talking about limited company, many people think about grand PLCs and boardrooms and annual general meetings and perhaps getting a share of the profits once or twice a year in the form of a dividend. Most limited companies don't operate like that. They're small in structure, they're small in ownership, and they're there as a vehicle to provide protection and income benefit to the people who own them. In tax terms, as soon as you start making profits above £7,500 a year, you're actually better off as a limited company compared to a sole trader. That's because the sole trader is actually paying tax at a rate of 29%. 20% tax plus an additional 9% in what's known as Class 4 National Insurance, which is just tax. You don't get a bigger hospital, you don't get hired to the end of the queue, you don't even get a bigger pension. It's just tax. A company pays tax at 20%. That's a 9% saving. Have a chat with your bank manager and see if you'll get 9% return on investment from that. Then give me a call because I'll put some money in as well. So a 9% tax saving is quite significant. But a company requires more administration. It's more costly to operate. So there has to be enough benefit in it for the company owner to make it worthwhile. We say, if you're making more than about £15,000 a year in profit, so that's your sales and then with all your expenses taken off, you should take a look at it. At that level, there's enough benefit to outweigh some of the disadvantages of structure and cost. As an owner, you get a share of the profits. That comes in what's known as a dividend. Now you can have those dividends as frequently as you want. Some people think you can maybe only have them once or twice a year. You could have 365 dividends in a year if you really wanted to, and if your business allowed it, and if, of course, you put the necessary paperwork together. The other big advantage of the limited company is one of protection. I don't want to lose my house if the business goes wrong, and I'm sure neither do you. Limited company, if you run it correctly, gives protection against your personal possessions becoming part of any carve-up situation that might happen. So that's the limited company. If you're making profits, it's a good idea. If you're not, have a think about the sole trader. In the next video, I'm going to talk about VAT.